All right, let's dive right in. We're about to unpack a huge story that's unfolding right now, a high stakes game of geopolitical chess that is completely redrawing the map of the global economy. And trust me, this isn't just about headlines, it has massive implications for how we all think about investing. So, I want you to start by thinking about this one question: who actually controls the building blocks of our future? I mean, the real physical stuff, the materials and the tech that power everything from the phone in your hand to our most advanced military hardware. Because the answer to that question, well, that's where this new global conflict really begins. So here's how we're going to break it all down. First, we've got to understand the game board itself, just how deeply connected the US and Chinese economies really are. Then we'll look at the big moves China's been making. After that, we'll see how the West is trying to build a defense. And then we'll get practical. How do you, as an investor, navigate all this? Finally, we'll look ahead and ask, what's the next move? Okay, so before any moves are made in a chess match, you have to understand the board. And for decades, the US and China weren't just rivals. No, they were more like partners, locked together in this incredibly complex global economic system. At the heart of it all is this, well, it's a kind of crazy financial loop. It's worked like this for a long, long time. We, in the US, buy tons of stuff from China. We send them US dollars. What does China do with all those dollars? They turn right around and buy US Treasury bonds, which basically means they're loaning that money straight back to the US government. And you can see how this works for both sides, right? The US gets cheap electronics, shoes, you name it, plus a ready and willing buyer for its debt. And what does China get? They get a gigantic market to sell their stuff to, which fuels their whole manufacturing engine, and they get to hold on to a ton of stable, strong US dollars. For decades, this system worked for everyone. It created this deep, deep codependence. And this quote right here, it just nails the central irony of the whole thing. China actually needs a strong US dollar. Think about it. If you're selling billions of dollars of goods, you want the currency you're getting paid in to be worth a lot. This is what makes the situation so complex. Any really aggressive move from either side could totally backfire and end up hurting themselves just as much. But, and this is a huge but, the game is changing. China isn't just playing its old role anymore. It's starting to make some really bold, really strategic moves to press its advantages. This is the opening gambit of a whole new kind of war. Just look at this number for a second. 98%. That is China's slice of the global pie for a mineral called gallium. Now, you've probably never heard of it, but it is absolutely essential. We're talking about a key ingredient for advanced semiconductors, for 5G, and for serious military-grade hardware. And one country controls basically all of it. And it's not just gallium. As you can see here, they also have a stranglehold on germanium. And last year, Beijing made a move that sent a real shockwave through the global tech industry. They slapped export restrictions on both of them, citing national security. But let's be real, the message was crystal clear. We control these critical supply chains, and we are not afraid to use that control as a weapon. But this power play goes way beyond just physical stuff like minerals. It's also about controlling money and data. And for anyone invested in Chinese stocks, this has introduced a whole new world of risk, because Beijing has started cracking down hard on its own biggest tech companies. Now, to really get this, you have to understand something called a variable interest entity, or VIE. It's basically a legal magic trick. See, Chinese law says foreigners can't own stakes in sensitive industries like tech. So for years, the VIE was the clever workaround that let these companies raise billions from investors all over the world. Okay, let me walk you through this because it is so important. A big Chinese tech company wants to list on the New York Stock Exchange, but they can't. So what do? They set up a shell company in a place like the Cayman Islands. You, the investor, buy shares in that offshore company. And here's the catch, the part that changes everything. You do not own a single piece of the actual Chinese company. You own shares in a shell that has a contract saying it gets a piece of the profits. You own a piece of paper, a promise, not the real assets. And if you think that's just some technical, legal risk, think again. This right here is what happens when that risk becomes terrifyingly real. Jack Ma, the founder of Alibaba, took their most valuable asset, Alipay, and just spun it off. He made it a separate company that he personally owned. And the biggest foreign shareholders, Yahoo and SoftBank, well, because of that VIE structure, they had almost no legal power to stop him. It was a brutal lesson in who really calls the shots. And then there was the Didi saga, another massive wake-up call. Didi, the Uber of China, has this huge, successful IPO in New York. Days later, literally days, the Chinese government hits them with a cybersecurity probe and yanks their app from app stores. A few months after that, they're forced to delist from New York entirely. The message from Beijing could not have been louder or clearer. Our national champions will be listed on our exchanges under our control, period. So you put it all together. Weaponizing minerals, pulling the rug out from under foreign investors, forcing companies to come home. These aren't random events. They're a coordinated strategy. And that strategy has finally forced the West to wake up and start playing a new game. This is the countermove. For 30 years, the global economy ran on one idea: just in time. It was all about speed, efficiency, and finding the absolute lowest possible cost, even if that meant your entire global supply chain depended on one factory in one country. Well, that era is over. The new model is just in case. The focus now is on security, on reliability, on making sure you can actually get what you need, just in case something goes wrong. And yeah, it costs more, but the alternative is way riskier. One of the key strategies here is something called backward integration. It sounds technical, but the idea is simple. It's when a company or a country says, you know what, I'm not going to be held hostage by my suppliers anymore. So they decide to take over that part of the process themselves. An electric car company doesn't just buy batteries, it builds its own giant battery factory. Maybe it even gets into the business of mining its own lithium. It's all about taking back control of your own destiny. So this massive project to rebuild our supply chains creates a really interesting way to invest. It's the old picks and shovels play. Think about the gold rush, right? The guys who consistently made a fortune weren't the prospectors digging for gold who might find nothing. It was the guys selling the picks, the shovels, and the jeans to all the prospectors. Same idea here. Instead of betting on one single chip company, you can invest in the foundational businesses that everyone needs for this rebuild. We're talking about the companies that build cooling systems for all the new data centers, the ones that make the networking gear to connect everything, or even the firms that physically construct these new secure facilities. Okay, so this is all fascinating on a global scale, but let's bring it right down to you and your portfolio. In this new fracturing world, what's your move? What's the investor's playbook look like now? This is maybe the single most important takeaway. Geopolitics is the new fundamentals. It used to be enough to just analyze a company's earnings report and balance sheet. That's not enough anymore, not even close. Now you have to understand the bigger picture, the political risks, the supply chain vulnerabilities that could completely wipe out an otherwise healthy company overnight. So what does that look like in practice? Well, first, as we said, you can target those picks and shovels companies that benefit from the entire trend. You can also get broad exposure through specialized infrastructure ETFs. And this next one is key. You have to really dig in and analyze a company's power. Are they at the mercy of their suppliers, or do they call the shots? Also, look for industries with huge barriers to entry. Think massive semiconductor plants. Those high setup costs create a protective moat. And last, but maybe most important, you have to have an exit strategy before you even think about getting in. And I love this quote because it makes it so clear. Investing in this new world is like getting on a boat. And before you even step on that gangplank, you better know exactly where the lifeboats are and have a plan for how to get to them if you see an iceberg. Your exit plan isn't an afterthought. It's part of the initial decision. So, where's all of this headed? Honestly, we're living through a monumental shift. The old rulebook of globalization is being torn up, and the very supply chains that built the modern world are being completely redrawn. It feels like we're asking, is this checkmate for the old system? Or is it the start of a whole new game? And that really leaves us with one final question for you to think about. In this global chess match with entire economies on the line, how are you positioned? Are you playing defense, just trying to protect what you have from all this uncertainty? Or are you playing offense, looking for the incredible opportunities that are always created in moments of massive change? The next move is yours.